Good morning and welcome to Frontiers of Knowledge segment of Dr. Lamba's Awakening Call. People in India are aghast with a feeling of déjà vu that the Indian rupee is having a free fall in terms of parity with dollars for the first time in history. That Indian rupees has fallen as low as rupees 80 for $1. It's a matter of concern, undoubtedly, but it's not a matter of panic. As a matter of fact, if you look at the things dispassionately, it is something which is common and it's often forgotten by the people who are worried that the rupee is still overvalued in terms of REER. Now, what is REER? This is related to the currencies in the region and worldwide, as you would see. There was a comment yesterday by Mr. Singh Jaspal, and he said, well, look here, in the times of Manmohan Singh also, rupee had fallen and BJP was very critical of it. Yes, it was. And he asked me the reason. I said, simple. A, it was politics. Secondly, at that time, while the rupee had fallen, the currencies of other countries had not fallen. This time, currencies of UK, currencies of Japan, Thailand, Korea, Sri Lanka, name it. Practically all the currencies, even of the European euro, has fallen down. So while the parity with the dollar is lost, the parity with the other currency is not. So the condition is not the same as it was then. But yes, I agree, it was politics and the politicians missed no chance. Now looking at the rupee, Indian rupee, the fortunes are not too bad if the capital flows are strong. It is possible that FPIs will come back to the equity market once valuations turn more attractive. Now you can very easily say, well, if and buts, yes, but then whole economy depends on that. Reserve Bank of India sold around $45 billion of foreign exchange since November. And psychologically it's a significant exchange rate level of 80 rupees to a US dollar as it was the early trade on Tuesday. It recovered somewhat around 79.90. And since the war in Ukraine began and crude oil started going up, the rupee has been steadily losing value against dollar. There are growing concern that the weaker rupee affects the broader economy. But does it really? Today only the Indian billionaire crossed the record of Bill Gates and became the fourth richest man in the world. So, economy is still not suffering. Yes, inflation is high. And that inflation, secondly, weak growth. Growth is there, but it's very weak. And one thing which is ignored is that rupee has held up surprisingly well and maintained a relative outperforming among the emerging market peers, even though the crude oil prices have risen sharply. And the foreign portfolio investors, FPIs, have pulled out around $25 billion since last November. It's not a small amount, $25 billion foreign investment coming out. Now the trend is the other way around because between November and late this February, the currency did not move at all. Then the escalation of the geopolitical tensions, the downward trend, that was relatively very modest. And the relative strength of the Indian currency has been attributed to the intervention in the currency market by the Reserve Bank of India. Now here there's a difference. The central banks in no other country would intervene in the currency market. But Reserve Bank of India used $600 billion to good use. And it sold, as I said earlier, $45 billion since November. There's no doubt that rupee is starting to feel the pressure, and the US Federal Department, they are now taking up rate hikes. Last week, the Dolex DXY strengthened, and the result is that the crude oil prices are expected to remain elevated in the coming years, at least in the foreseeable future. On Monday, the rupee fell to a lifetime low, then it recovered 12 cents, then it again fell down, and the consensus is that India's current account deficit could widen to 3.5% of the GDP or more even. And it depends on where the oil prices do. This would push the balance of payments into a surplus. Now, coming from deficit, which it was, to a surplus, even though the rupee is falling, is definitely a glimmer of hope. Now, the imports will be costly. So what will happen? It will help rein in the demand for some products, but the import bill is continued to be happy because of the crude oil, coal, fertilizers, edible oil, and that's a problem. Now, in Manmohan Singh's time, what had happened was, since the imports were difficult, but even exports were difficult because rupee had fallen in terms of all the currencies. That was a tragedy. Euro was higher, British pound was higher, yen was higher, dollar was higher. Now only dollar is higher. And marginally, some currencies like Canadian are higher, but euro, pound, yen, Korean, Philippine, they are all lower. They are still at par. So when rupee depreciates, it directly impacts inflation because India still imports 85% of its oil requirement. And once oil is expensive, you spend more on that, the cascading effect cannot be ignored. So, without disrupting manufacturing, the import of some items must be stopped. And according to the economists, a trade deficit of 300 billion, if it crosses that will be a matter of concern. So we have to wait and watch. Unfortunately, the factors that have worked to drive up the dollar are not going to go away soon. There is little clarity in the turn now geopolitical situation. Ukraine-Russian hostilities could last, and the result would be the quantum of the Russian supply of oil market. They might not be as easily available to India as it was. The crude price forecast for next year is ranging from $100 a barrel to $120 a barrel. So, under these circumstances, the dollar is likely to have a safe haven currency, at least until the inflation is tamed, and the US Federal Department has done its rate hikes. Now the markets are penciling in rate hikes of around 250 basis points. So dollar would remain strong, that is undeniable. And when the dollar remains strong, the other currencies would automatically not be strong enough. Now India's fortune can look up if the capital flows are stopped. And if possible, FBIs will come back to the equity market when the valuation turns more effective, which is going to be possible. As a matter of fact, the FDI has become more stable and it will flow in at an annual rate of $40 billion net, not gross. $40 billion net would be the inflow. Exports have been doing exceptionally well, but the slowdown in the global growth and the global trade could lose some of the momentum. And that is why India's exports are increasing and increasing to those countries where the currency has fallen, but more than that of India as well. I'll come to that. What is really happening is there's a question that what I refer to REER. What's that? Is the real effective exchange rate. You know there are two exchange rates. One is the legal one, other is the effective exchange rate. Sometimes it can be higher, sometimes it can be lower. Now what happens? The weaker rupee does not give exporters a big edge as they are typically price takers. Overvaluation also doesn't help. So what's required? Government should upgrade infrastructure to make it easier for the exporting units to operate more efficiently. As a matter of fact, Government of India should learn a lesson from Canada here. Canada's EDC is performing a much better job than, say, Exim Bank of India. The service exports are doing exceptionally well for India and would continue to do so. So the recent fall in rupees should not be cause of the panic. And that is why Reserve Bank of India is very comfortable. Now remember, at that time when the currency had fallen under MMS, even the Reserve Bank, Rajan, was very annoyed. Now global rupees are being used to settle, government is doing that, to allow rupees to settle foreign trade. And it's a good move. It will have a long-term effect because you are cutting out dollar. You are not first converting into dollar to sell, then get the money back. No. You have a direct tie-up, as it has happened with Russia, and it's going to happen with Japan. It has already been done, as a matter of fact, and with Korea, and then shortly with Europe. So the rupee would be the settling currency. So if the prices fall down of the rupee vis-a-vis dollar, it's immaterial because dollar is being sidelined. The cross-border trade deals would have a long-term benefit, and the still work in progress is of essence that the international transactions would be settled in rupee context. So these measures need to be located in the context of immediate need to cope with the development in the foreign currency market. The one thing more, global commodity prices have dipped since the high level in May. June and July they dipped, and this is good for India. The average price of Indian basket of crude in July was $106. Now it is 9% below June. It has been partially offset by the weakening of the rupee against the dollar. And especially since we are paying for the crude in rupees now to Russia. So the prominent central banks all over have started increasing interest rate. Canada had horrible increase, maximum in the last 30 years. And since January, foreign portfolio outflow has crossed $30 billion. Then RBI has adopted other measures last week. It liberalized the forex inflows. It has provided a window to settle trades in rupees all over. And this window serves two purposes. Right now, it enables India to grab opportunities such as discounts on the Russian oil. For example, India imported 1.3 billion of Russian crude in April, making the fourth largest source. 1 year back, there was no crude import from Russia. And the rupee settlement would allow Indian firms to circumvent the Western sanctions. Long-term benefits are already there, but the short-term are much more. And that is a positive thing. And this trend will continue. For example, I'll give you an example. The Bank of Israel plans to reallocate a part of the US dollars in the currencies of Australia, Canada, China, Japan. So this is an opportunity for India to seize, and the government should complement the efforts of RBI through relevant policy changes. Then now comes the major thing. As I said earlier, rupee is not the currency worst hit in the world. It is not even the worst hit currency in Asia. Sri Lanka has seen its currency fall nearly 80% in the last 6 months. From 202 rupees per US dollar in January 19, today it is 362 rupees per US dollar. Then look at it, Pakistan rupee is 222 rupees to a dollar, 22% fall. Japanese yen has performed still worse. It fell 20.48% in the last 6 months, and it was trading at 137.95 US dollars day before yesterday. So if Indian was 80 and yen is there, then the British pound, the sterling, has done still worse against the US dollar. And it's worse than the Indian rupee. And euro is equally worse. The pound has fallen 13.69%. Euro has fallen 11.3%. So looking at it, Indian rupee, as a matter of fact, has fallen much less than the euro, yen, pound, and other currencies. And compared to the euro fall, then not only that, Asian countries like baht, Korean won, Bangladeshi taka, Philippines peso, Taiwanese dollar, they have performed worse than rupee. So Indian export market is expanding still further in these countries. These countries would be the Indian market for imports, and USA and the countries for exports. So this is something of a mixed nature, but on the whole, it is not a negative thing that has happened. It's a matter of concern, as I said, and if we can develop infrastructure, then there can be no issue at all as far as Indian rupee is concerned. Panic is uncalled for, unnecessary, and it only betrays ignorance rather than the reality of the situation. Thank you.